Okay, we're going to get started. We're going to review the S&P 500 like we always do. You can see that this green line right here is the 100-day moving average. And for the S&P, that has held, and it's almost like bouncing on that 200-day moving average. We have a well-defined support um, channel going back to November of last year. And we also have another little channel going downward, which is this blue lines that I have here. And we're going to like a point. I think we broke out of that today. And we're in the midst of earnings season right now. So we were talking last week about how earnings sometimes is a catalyst for stocks to go up. And if we look at our earnings calendar, we can see um, we were expecting some pretty good things for this week because the Fed was talking, and um, and we have earnings reports. 33% of the S&P 500 earnings came out this week, including Apple, Amazon, a couple other big tech stocks. So we had, for the most part, good earnings, and that helped the stock market go up. We also have today declining interest rates, which is definitely helping the stock market now. Let's look at the 10-year, just because that is moving the stock market. It is down today. If we look at the front page of Yahoo Finance, we see the top story is jobs report. The U.S. labor market cooled notably in April. So that is why the Treasury is down today. Because if the U.S. labor market is cool, the Fed doesn't have to raise interest rates. That means the economy is cooling off too. Now, let's look at some of our talking points. Okay, so let me see. So the S&P has been doing pretty good this week. We had earnings reports coming out in May here. For the most part, most of our stocks we've been watching have been oversold in the last week of April, and they were due for a bounce. And we got this bounce off of this long-term trend line and the 100-day moving average in the S&P. And we see also that the treasuries are down 2% this week, even more after today. So that is a catalyst for the stock market to go up. The Fed had a meeting this week, and they said that they will not raise interest rates in the near term. That is positive for the stock market because that was one of the biggest worries. And also we have they mentioned that they would not roll bonds off of their portfolio. In other words, they were doing some easing. No, they were doing some tightening by not renewing some of the bonds they bought. And now they are easing, and that is very supportive of the stock market. Now, okay, we're not really going a whole lot of anywhere with momentum. We're still in a fearful state in the stock market. But a lot of times when the stock market's fearful, that's a good time whenever stocks go up. Let's look at the S&P right now. We're rallying today. We had a good report from Apple last night, and that is kickstarting all the Magnificent Seven stocks. Let's see what's going on in the stock market. We have Amgen as one of the highest percentage gainers today. Amgen basically came out with a report we'll go over later that they have a new drug that could be fighting obesity. And you can see one of the top losers today is is Eli Lilly because that's a competitor. So right now, Eli Lilly has a big part of that market. And if Amgen gets into it, that could hurt. Apple is up 6%. They had an earnings report that was a better than expected or worse. No, it's better than feared report. Other stocks to keep in mind. I don't see anything we're following in here. Let's look at some of the NASDAQ top stocks. It's taking a while to refresh that. Okay, Amgen, we have Apple, NVIDIA is doing good, Broadcom. Okay, so a lot of the AI stocks are back in uptrend, are going up today. The ones doing the worst are, I see a lot of antivirus companies such as Zscaler. We have Fortinet, Datadog. Okay, so a lot of high PE ratio stocks in this list here. And okay, that's all I can get from that. Let's look at the sectors doing the best and worst. And let's before we do that, we know that 10-year treasury is going down. So we know from that stocks revolving around the interest rates are going to do better today. So like for instance, technology is doing good because of Apple and their great earnings report. We have materials, real estate. Real estate's doing good because if the interest rates are going down in the US 10-year treasury, then that helps real estate because more people can afford houses. And as the interest rates go down, that allows higher yielding stocks like utilities to go up. And that's all we can get from this. We know the price of oil is going down today, so that's why energy is down. Okay, let's look at the S&P 500. You can see we're starting this a little bit of an we're bouncing off of this 100-day moving average, and we're approaching the 50-day moving average. This is very important level for momentum. We're still in an uptrend in this 50-day moving average. So that is pretty positive. And we're still at 50 in the stochastics. So we're not overbought too much. We're not oversold too much. We're right in between. Okay, so let's look at some of our talking points. The May is traditionally a good month of the year. We have earnings reports coming out in April and May. So that's a good reason for the stocks to go up. June, July aren't so great. August, September are the worst. So you have to prepare yourself mentally for a couple of months after May that aren't going to be that great. Okay, so we already looked at this. The 10-year treasury is basically been going down 2% this week. And I think the stock market has been going up 2% basically. So it's still an inverse correlation. And it seems like what the Fed said on Tuesday or Wednesday, they're not going to raise interest rates. That was the big thing. And the stock market went up after that. And also they said they're not renewing, they're not going to let the bonds fall off their portfolio. That is good for the stock market. So now we have the 2-year, it's the same kind of chart. It's going down and the stock market goes up. All right, so oil is down 5% this week. That is good for inflation. So we have a lot of good variables moving into how much people are willing to pay for stocks. So as the price of oil goes down, what people are willing to pay for a PE ratio for the S&P goes up. So that means the stock market goes up. It's not that great for oil stocks though. But that helps inflation. And the US dollar is unchanged this week, and inflation is pretty much unchanged. And gold is down 1.4%. Gold has traditionally been, whenever interest rates go up for the 10-year, the yields, um, gold is a sense is a store of value over time. So whenever there's uncertainty in the stock market and when there's uncertainty in the world, such as right here, whenever everyone was selling and we were at the bottom and we were totally oversold, people gravitated towards gold because it holds its value over time and it's not correlated to the stock market. Okay, so fear and greed index. We have fear. That's probably because it's kind of almost a one-to-one correlation to how the stock market's going. Um, so right now we have fear. That's a good indication that there's a lot of stocks that are oversold that could be bought. And so fear is start looking for things to buy. Extreme fear is time to hold your nose and buy or don't sell what you have. Okay, so that's great. Okay, AII sentiment survey. It's halfway between bullish and halfway to bearish. So there's no real good indication there. Okay, so let's look at the US dollars in an uptrend. Okay, that's interesting to know. So as the US dollar appreciates, the value of commodities also goes up. So for instance, the price of gold will go up if the dollar continues to go up against other currencies. So let me see, VIX is still pretty low. It was 16, now it's down to 14. So people are not buying protection. That's a good factor into this VIX. It's a fear indicator. So people are not buying protection. Let's look at where we are in this this emotional chart. We're in fear right now. We haven't been in capitulation for like 2 years or 3 years. So right now we're at fear, and pretty soon we're going to be returned to normal. And once we realize the earnings in the earnings season aren't that bad, we probably go back up to denial and greed, and then we get into that again. So right now we're oversold in a lot of different ways. So we're still fearful, but we're gaining momentum with every earnings report that is good. The let me see, the things that could cause a crisis are kind of dying down because the magnificent stocks being overvalued, that's not really a problem anymore. We have a lot of good earnings reports that came out and the stocks went up. So earnings is causing that not to be a problem anymore. And we still have a problem with the US debt. And that could be most likely the next big issue in the stock market for a crash. And okay, everything pretty much else seems to be under control. Let's look at the best to worst. We still have healthcare, energy, and consumer staples doing pretty good this year in financials. So the worst from last year turned out to be pretty darn good this year. And let me see. Dan Now's picks, Meta and Amazon are up over 20% apiece this year. So they continue to do well. And he also likes NVIDIA over Apple because Apple isn't growing their revenue. We'll go over that a little bit later. And okay, here's an article from Johnson & Johnson moves forward with a settlement for the talc cancer lawsuits. We've been following this stock as a potential dividend stock. And it's had this hanging over its head for like a long time. The possible lawsuit from people using their talcum powder and getting cancer. So this isn't a sure thing yet, and this should cover 99% of all talc-related lawsuits. So let's see if that actually happens. As soon as it happens, the stock will probably do pretty good. And as soon as that was announced, it went up like a couple percent. So it's still in a downtrend, and it's still pretty much overpriced. We're going to look at it just for kicks. it's only growing at 3 to 7% for the next couple years. So it has a PE of 22 and a 3.31 dividend. So they have enough money to cover their dividends. So if you want something to buy and hold and it's going to pay a 3% dividend over time, this could be a good stock to buy. But for me, I'd rather have a stock that's growing a little more than 7.35%. So the peg ratio is 6. That is like pretty outrageous. It's pretty expensive. Usually when stocks trade for a peg ratio of 6, they're usually a very consistent earning company. So I guess this is a good stock to buy whenever the stock market's crashing and its peg ratio a little bit lower than this. So I'm not going to buy this one. It isn't growing a whole lot, and I like growth stocks. Okay. But as soon as this talcum powder lawsuit is addressed and it's finalized, that'll allow the stock to basically end the downtrend and start going up again. Okay, so I picked out a couple interesting charts that of strong stocks. Amazon is. I remember we were talking about Amazon in December. I mean, in January, beginning of the year. Dan now says it's one of the best stocks. They have a moat that it's really hard to beat. They have 1 day delivery. They have um, they have an excellent advertising business that's like maybe the third best in the country. And just think if you're buying something in Amazon and you can advertise to that targeted user buying that one thing that they want, that is pretty um, pretty effective advertising that most other companies don't have. And they also have AWS and AI as catalysts. They have a lot of things going for them. They're in an uptrend and they're they're halfway between overbought and oversold and halfway into their channel. The Apple has been in a sideways pattern for over more than a year. They're just um, basically the revenue hasn't been growing year over year, and it seems like everyone's waiting for a new catalyst for their company to grow. Their iPhone sales are decreasing. They're kind of stuck in this range right here. They're up 7% today, so maybe they can break out of this downtrend today and go up to this spot right here. Let's look at Meta. Meta is still in this uptrend from November of last year. They're at the total bottom of their channel and they're oversold. This is an example of a stock that no one wants right now, but they do have catalysts of um, the election. People are going to be wanting to advertise during the election, and they have AI maybe improving their search results for their customers. And so they also have a lot of different products that they need to put advertising in, like WhatsApp. So let's look at, okay, so let's look at CMG. This is Chipotle. So they have a stock split coming up. They're $3,000 a share now, but pretty soon they're going to be like $100 a share or less. So that always makes people excited whenever you have a stock split. And so they're in an uptrend. This is one of the most powerful stocks that we're following. And Bill Ackman owns, this is his top 5 position, maybe his top position that he owns. And that is for someone who's a value investor following Warren Buffett, that is a huge compliment to have a top 5 portfolio position. But it's really expensive. Its peg ratio is like 2 or 3, but it's consistently growing at 20%. So let's look at the next one. Okay, this is our top story today. U.S. labor market cooled notably. The Federal Reserve's dual mandate is to achieve maximum employment and keep prices stable. This is like something you really have to know if you're an investor because it's so if the U.S. labor market is cooling, that means the economy is not doing so good, and the Fed doesn't have to raise interest rates, or they have to reduce interest rates. So um, that means the stock market will most likely go up if the labor market cools. So every piece of news that you get from the news, or every piece of news that you got to figure if it's bad, good, or no effect on the stock or whatever you're holding. And I do that every day. I'm always looking at, is that positive or negative or no effect? Um, okay, here's another article. It's pretty interesting. Berkshire Hathaway shareholder meeting. It's happening tomorrow in Omaha, Nebraska. A lot of times people people get excited about Berkshire Hathaway and some of the stocks they talk about at the meeting. And it's almost for certain they're going to talk about Apple and Bank of America, the top two holdings. Apple, um, Warren Buffett's like a cheerleader for the stock market. He has a total belief and conviction in the U.S. economy and the U.S. businesses. And a lot of times, whenever everyone meets, there are powerful money managers that go to this meeting, and a lot of times they get excited. And Monday, you have stock market go up. That's why I think this could be a good kick in the pants for the stock market. Okay, so I'm going to go over some of Berkshire Hathaway's top holdings and why he holds them. You can see that he has a lot of products, a lot of companies that have consistent, stable demand over time. Some of the most common themes are food, such as Coca-Cola. We have Kraft Heinz. We have Kroger. We have, okay, so that's a good theme right there. Um, and there's basically a steady demand for these food products over time, and they pay a dividend. So that's a total return. And also, there are stocks that Warren Buffett understands. He understands Coca-Cola. He drinks it. That's his favorite. He drinks 5 cans of soda a day or something. So other things that this is probably one of the only technology companies that he owns, Apple. He likes Apple because people don't like to part from their iPhone. They will pay a premium. They will work really hard to buy a iPhone, and they're not going to part from it. And it's very sticky. That's his primary use. That's his thesis for investing in Apple. And it also has, they're also giving back to shareholders and buying back stock. So on yesterday, Apple announced a $110 billion stock buyback. That is taking 5% of the stock off of the stock market. So that basically grows the value of your holding by 5% immediately. So even though Apple's only growing at 3%, when you add in the 5% from that buyback, it gets up to like maybe 10 PE, that 10 percent total return. And now he has a lot of banks too. Look, Bank of America, banks and financial companies. So he has banks like Bank of America. He has Citigroup. Let's see, Capital One. Okay, that's a couple of them. And he also has credit cards. He owns every credit card company, American Express, Visa, MasterCard. So he likes those companies because there's a steady amount of money being made and it's consistent over time. And it's really hard to break these monopolies that these three credit card companies have. Um, so anyway, the theme for Warren Buffett's top holdings are consistency over time. In 20 years, you're going to need banks. In 20 years, you're still going to be eating food and have a steady demand for credit cards. So a lot of the stocks we're following in our portfolio um, are in this top holdings. And It's really great to have a world-class investor like Warren Buffett buy the same stocks that you're holding. All right. All right. So let's look at Berkshire Hathaway, their earnings projections. You don't see, there's not a whole lot of analysts following this company. It's really hard to grasp the hundreds of companies that are in Berkshire Hathaway. And the earnings estimates only go out 1 year. And that's probably because there's not a lot of analyst coverage and um, not a lot of companies want to do that research to figure out how much it's really worth. And it's a complicated company because it has individual companies like um, Norfolk Southern, and it has Geico, and these are all private companies, not public. And it has a portfolio of stocks that we just went over. But it's only growing at 4%, 9% from last year to this year, and 4% from this year. Its PE ratio is only 9. And so if you add, so it's probably growing around 7% average. Its PEG ratio is 1.2. So that's pretty reasonable priced. So it's a very conservative total return stock. It doesn't have a dividend, but it does have a lot of cash and it is very stable. And um, one of the tailwinds for this company is it has an Geico, and Geico is all, the interest rate, no, the cost of auto insurance is skyrocketing. And so they're charging higher rates for Geico. And I'm sure that um, that's helping them out. What other things? I think that's about it. And Apple is one of their biggest holdings. It's doing very good today. Okay, so if you can see the interesting thing about Berkshire Hathaway is they have total cash of 167 billion. They need to have like maybe 50 billion for insurance payouts because of their regulated company, but their return on equity and profit margin is very good. The only knock I have with this company is they're only growing at 4%. Um, but I don't know how accurate this is, if they really, um, but it's only growing at 4%. If that's true, it's a very low growth company. It's not even paying a dividend. So you have to trust Warren Buffett that over time his investments will be um, will pay off over time. Let me see. Okay, so this is Berkshire Hathaway stock. You can see this is like almost the perfect time to buy it. It's at bottom part of its channel and it's oversold. And we're right before a major catalyst, which is the Berkshire Hathaway meeting, which everyone gets excited about what they're doing. It's like a huge free advertisement for the stock. Okay, we had earnings come out for Apple yesterday. They beat um, it was better than feared quarter. There were talks about AI, which fluffed the stock. Anytime a stock um, mentions AI, um, a company mentions that they're doing AI, there's a certain premium that's given to it. So that could help the stock. And they said they're going to they're going to buy back $110 billion in stock um, and they're going to return to growth. That's the biggest thing that Tim Cook said. So return to growth means their revenue is going to be increasing. So they stressed that they have more installed active devices. So they had 2 billion last year. So 2 billion, and if they sell services to that 2 billion, that's where they make a lot of their money. Their margins are getting higher. That means their and recurring revenues from its services. That services is the best part of their company. And they mentioned artificial intelligence. Um, so I looked at their earnings estimates again just after this call, And it's not that, and this is actually their revenue estimates, not their earnings estimates. No, so revenue year over year is flat. This is like 0% growth. That is compared to the other Mag 7 names, it's super underperforming. All the other NVIDIA, Microsoft, Meta, they're all 32% year over year revenue growth. And Apple isn't growing their revenue. But Tim Cook said that they would be growing in the future, in the near future. So this isn't that exciting for me, but um, if you put together this with a total return, a 5% buyback back of their stock, that if you average this out, it's like maybe 5% growth over the next couple of years, plus 5% maybe a year buybacks. That's 10% total return. And you get a 1% dividend or something like that. So it's still pretty expensive. It's still about 3 times overvalued. If you see there, its PE is 26. It's growing at like 8% their earnings. And that means their PEG ratio is 3. So I'm holding it because, over time they're going to come out with a new product every 6 years that's going to make them grow 10% to 15% again. And I'm just waiting for that. And they're pretty consistent at having good judgment to come out with those. Right now, their headset that they came with, the virtual reality headset that they had, it isn't talked about anymore that much. So it's kind of fell flat. So that wasn't the major product that we were looking for. Google is going through an antitrust lawsuit right now, and its final arguments are happening. That is not good for Google because they might be forced to undo some of their agreements with Apple, and um, that might cause them to eventually break up the company or change the way they do business. And um, that might happen. So it's always good to keep that in mind. This happens to be the biggest, you call it a wart for a stock. Every stock has problems, but this is the biggest problem for Google right now. And it might force them to, they have 90% market share for search right now, and this might force them to um, break up the company or change the way or give some of that to some other search companies. Okay, so Google is still growing at like 12%. Let me see. Google is still growing around 15% a year, and it's pretty consistent growth. And their PE is 22. So they're about 1.5 times overvalued right now. So in a bad market, if the stock market's crashing, they'll probably go down to like 98, and then they will be fairly valued, and their PE will be 12 at that or 15 at that time. So that's something to keep in mind. This is something I've held since 2008, and it continues to grow at 14 or 15% every year, which is pretty cool. Eli Lilly came out with earnings this week, and it was really good. They were really good. They're growing around 27 to 30% every year now. Um, and they have a blockbuster diabetes and weight loss drug. And you can see that they grew 210% from last year to this year. And now they're expected to grow around 27% over the next couple of years. So that makes the PEG ratio 1.9, which is 1.9 times overvalued. Any kind of news like a competitor like Amgen that came out today, that could make the PEG ratio go back down to 1. So we'll see. That's like half the price it's at right now. Okay, so there's a new story that says Amgen touts experimental obesity drug. So we have, this is maybe the third major competitor to Eli Lilly's drug. It's still in development, and So Amgen went up a lot because of that. And Eli Lilly and Novo Nordisk and Viking went down today. But we'll look at Amgen because we're following the stock. They're not growing a whole lot right now. Their estimates are for maybe 6% growth over the next couple of years. That means the PE PEG ratio is around 2.3. Um, so maybe for, it's a very low growth stock right now, but if this drug is approved, then perhaps it might have the same growth rate as the other stocks. The one benefit for this stock is they have it in a better format for they only have one injection every month, maybe into the arm, whereas Eli Lilly is every week. And there are companies that are actually coming out with tablet form for weight loss drugs. And I'd rather take a tablet than have an injection every day or every week. So, so anyway, that could be a competitor for the weight loss world. All right, let's look at, okay, let's look at some of more of what's going on. Okay, we already looked at this. Um, okay, let's look at some of our charts. We update this on a regular basis. Let's look at, okay, so you can see that we were in a position of major oversold maybe 2 weeks ago, 1 week ago. Almost every index was totally oversold and at the bottom of their channel. Now, most of the indexes are halfway between overbought and oversold. And you can see that they're basically halfway. So they have a little bit more room to go. And this, yeah, XLF, the financials are on the bottom of their channel. So we're not overbought in any of these sectors. We can see the XLE just took a turn. XLE is at its 100-day moving average, and it broke out of its uptrend from the beginning of this year. So we'll keep our eyes on that one. Let me see. It's interesting. Uranium is going up. This is the uranium ETF. So I guess there's a steady demand over time in the world for clean energy, and this is a ETF that is good for that kind of theme. Let me see. Okay, AbbVie. We can see a lot of the drug stocks starting to go down in a downtrend. We saw that last week, and it seems like it's continuing. We can see Abbott, very similar pattern. Almost all the drugs are breaking down there. Alibaba is in a sideways pattern, going sideways. In Google, it went up like 10% this week. They had a good earnings report also, but they're still kind of in this uptrend, starting way back in November. So it's one of the strongest stocks we're following. It could be affected by this antitrust lawsuit, and there's another one coming later on this year. So they have a lot of this lawsuits coming against them, and hopefully they can defend it. If they're forced to break up the company, you would have 5 Googles, and I think 5 Googles could be maybe I don't know if it'd be strong as one Google, but it would still be worth me not selling because then you'd have 5 different companies growing with their own agendas and their own ideas. Most likely what's going to happen is Google might be forced to remedy their anti-competitive nature by not signing agreements with Apple to be the default browser in the iPhone. Something like that could cause them to lose market share. So I don't know. We'll see what happens. Hopefully Google can defend themselves. You can see Philip Morris is in a sideways pattern here. And Amazon is, like I mentioned earlier, it's in an uptrend. It's like one of the strongest stocks in the stock market. Anytime it gets near this bottom of the channel and it's oversold, that's the time to start looking to buy it. And Apple is, you can see it's in this downtrend, but it actually broke out of that today. It went up 7%. So it's not in the downtrend anymore. And it looks like it's continuing in this sideways pattern we've had for a couple years until they have the revenue growing. It looks like we're still in a sideways pattern. You see, nothing interesting. Okay, this stock is like a chart of that. It's not very good at all. It's, you can see there, um, lower lows, lower highs, and their earnings estimates aren't very good either. So this is one to stay away from. Colgate is in an uptrend, and CSX is in a downtrend right now, but it's right at its 200-day moving average. I've held this since like 2010. And if you look at a chart from this from 2010, it's like in a straight line up. This is just, they have a monopoly. There's not, you can't build railroads anymore. So they have, their theme for this company is increased efficiency and um, increased traffic over time. Meta, you can see that it's still in an uptrend. It kind of is forming this little downtrend in the blue channel line, but my guess is it'll be up here before it would be break out of this. But we're finding out like right now. JP Morgan is in an uptrend with a lot of the financials. Microsoft is also very similar to Amazon in an uptrend, has AI as the kicker that's making it, helping it out. It had a good earnings report too. Pepsi is in a very small uptrend. It was one of the worst performers last year, and it pays a dividend. And let me see, what other interesting. Starbucks had a really bad earnings report this week, and they went down to $75 a share, and they're still pretty expensive. And this is kind of one that's um, they're just having a lot of challenges with raising prices, and people are actually, they mentioned that people are not buying as much as they used to because of the raised prices. So we have, this is one of the first stocks that are reporting problems with the customers. They're not accepting their higher prices, and that could be a sign the economy is not doing so good and it's slowing down. Verizon is in like a sideways pattern right now. Not really. You can, if you look at a big picture, it's kind of in an uptrend, but it's right with a lot of other stocks at the bottom of this channel, and it could either go back up to here and go here and here, or it could go up to here. We'll see. Let's see. Okay, Amgen, it went up a lot today. So I guess it's been in an uptrend for a while. It broke down into this little channel, but now it's back up to this higher highs and higher lows in this black channel, not the blue one. And we already talked about Chipotle. All right. Okay, MasterCard is in an uptrend. It's at the bottom of its channel, and it's, it's near oversold. And let me see, what other good ones to follow? Okay, Boeing is having problems with quality control. It's still in its little downtrend. They still have a duopoly with selling airplanes, but they can't produce quality airplanes right now. That's their biggest problem. I'm not going to own it just because there's headline risk. Tomorrow, you might find holes in the fuselage found, and then you have to ground airplanes. And you don't have those kind of quality control problems with Google and Amazon and Facebook. This company doesn't have that together yet, but we're following it just for kicks. Tesla has been in a downtrend for quite a while. They're probably at the top of their channel in their downtrend. If they break out of this, it might start an uptrend, but right now it's down. Its trend is downward. NVIDIA, it's it's going to report earnings pretty soon. My guess is it's going to be coming up to here next rather than following this blue channel down. But we'll see. I think that's all I had to say for today. Thank you for attending. If I could answer any questions for you during the week, let me know. And then, and have a good week ahead. I'll talk to you next time.